Companies are in trouble. There's one car company, at least this week, is not in trouble. That's
Right.
Tesla,
Yes.
that you're invested in.
Yes.
So explain Tesla to me. I understand it's a really great car and it's really terrific. It's really forward-looking. If you look at the number of cars they make compared to the value of the company, compared to any other company, it's crazy.
Well, we just published a report with our, again, long-term forecast. And the numbers have gone up dramatically. And yet, we think it's incredibly undervalued. And the reason for that, there are two assumptions that have changed with in the last couple of reports. One, our bull case for Tesla in our old model was that it would lose a third of its market share. It had in 2018 17% global market share, including China. That it would lose as the Tesla killers came into the market, Audi and Porsche Taycan and Jaguar. Well, guess what? Its share increased last year to 18%.
So do you think Tesla can have 17 or 18% of the worldwide market when it's all electric vehicles? Is that what you're saying?
And if we are right, this stock has only begun.
But that makes you think that this isn't actually a vote for Tesla. It's a vote in all these other established car companies completely failing to make the crucial transition, which they've known for several years they were going to have to make.
Yeah,
can we really be that pessimistic about the likes of BMW?
They're failing miserably. And in battery technology, they're not riding down the consumer electronics cost curve, which Tesla decided to run down, and people made fun of them. Oh, you're putting cell phone batteries at the bottom of the car, cell phone batteries that blow up. No, they chose lithium-ion pouch, which is much more costly than Tesla's consumer electronics batteries. So if they want to compete with Tesla, they'll have to sell every electric vehicle at a loss. At the same time, they're losing their internal combustion engine business. The reason this is going to happen is because within the next 18 months, 2 years, the price of an electric vehicle, like for like categories, is going to drop below that for a gas-powered vehicle for the first time. And it will continue to fall because we're riding down the battery cost curve decline. So the traditional auto manufacturers, if you look at their R&D budgets, or you look at GM's, 10% of its R&D, $25 billion in, capital spending is allocated to electric. They should be at almost 100 now, given what's about to happen. And I think the reason Berlin, Germany, invited Tesla to build a factory 200 football fields, either soccer or our football, that big, is because they know they're in trouble. They've got to adjust, or else they're going to lose a tremendous number of jobs.
2023년에 테슬라 주식을 사시겠어요? 테슬라 회사는 항상 투자자들의 관심을 끌고 있는데 8월 첫째 주에 테슬라의 주가는 놀랍게도 $110나 치솟았습니다. 시장 환경이 좋아진 덕분입니다. 나스닥 합성지수가 그해 34% 상승한 걸 보면 나스닥 지수가 매년 35% 오르지 않습니다. 2022년에는 주가가 30% 40%나 하락했습니다. 이런 일이 반복될 것을 모르는 구매자들은 두려워할 수 있습니다. 2023년 테슬라 주가가 급등했을 때처럼요. 경험이 많을수록 몇 년 후에 테슬라 주식이 20% 30% 떨어진다고 해도 놀랄 일이 아니라고 할 겁니다. 4개월 6개월 동안요 더 익숙해지고 이런 걸 자주 보시면 익숙해져서 당황하지는 않으실 겁니다.
A little early to count the traditional companies out of it. I mean, they haven't really almost gotten started.
So
Taycan is how old?
That is the problem. That is the problem. They have just gotten started, and what they have delivered are cars that don't even meet whether it's range or other metrics. The Model S circa 2012. Now, of course, there are three other advantages Tesla has. So batteries, one. Second is they have their own artificial intelligence chip. And our analyst, James Wang, who worked at NVIDIA, the artificial intelligence company, for 8 years, looked at the specs of this chip and said, oh my gosh, they're 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. And that's important because we're going autonomous with electric. And autonomous is an artificial intelligence project, right? The winner will have the most data and the highest quality data. Tesla has 14 billion miles of real-world driving data today, and the closest competitor, Waymo, has 20 million. So and then the last is Tesla is the only auto manufacturer still that delivers over-the-air software updates to modify performance.
Recent trends show that Tesla outperformed Wall Street projections with its latest financial update, making $25 billion in sales and 78 cents per share. The company also built 480,000 vehicles. Seriod was up 80 sizes year over year, but shareholders were unhappy to see Tesla's gross margin drop from 25 in the second quarter of 2022 to 18 in the most recent quarter. Tesla's gross margin was 25 last year and is now 18, which is a cause for concern for investors. The management had to cut car prices multiple times this year, which is why you don't have a lot of gross profit margin. They did this to boost demand at a time when consumers are dealing with high interest rates and inflationary pressures. Warren Buffett always said that when analyzing a company, you should also look at the economic situation with higher interest rates and inflationary pressures where commodity prices are rising frequently. How many people would buy a Tesla, even those who would normally buy one? High interest rates and inflation, people are likely to postpone their plan of buying a car. And in that time, if you offer your car at a discount, then a little bit more percentage of people are likely to buy. But when you do that, sure, the sales are up, but the gross margin also takes a hit. But I don't think Tesla did anything wrong here. Warren Buffett always said that you should always operate in regards to the economic situations of the country. And so the pricing cuts certainly deserve a lot of the blame for the shrinking operating margin. And however, Tesla's research and development expenses of $943 million during the quarter, which were up 40 year over year, hurt the profitability as well. Tesla wants to grow rapidly. Tesla wants to be ahead of the EV race, which means spending a lot of money in research and development. And those expenses were at a tune of $940 million, almost $1 billion. Tesla spent almost $1 billion on research and development in one single quarter, which was up 41 as well. Now, even margin is high, and even just imagine spending $1 billion a quarter on research. Now that takes a lot of toll in the profitability as well. But in the long run, the $1 billion spent in the research and development would be very much profitable. And though people can't see it today, the $1 billion spent today on research and development in the quarter won't go to waste for sure. And the benefit of continuously spending heavy money on research and development is that it can maintain Tesla's lead as a trailblazer in the industry, which Tesla needs to do so. The market cap does not go down to its competitors. So this is very crucial for Tesla, which means it is crucial for all of the investors like us as well. Now looking at the bigger picture, Tesla has become a dominant brand in the technology and automotive industries, recognized for its tremendous innovation, disruption, and forward-thinking designs. Thanks to the company's excellent investments in production capacity, it started to construct a cost curve advantage. When making cars, the company is profitable, while legacy automaker like Ford constantly loses money in its EV division. Kathy W. mentioned a couple of years ago that even for companies like Ford and GM to compete with Tesla, they must operate at a loss. That's why Ford and GM could never compete with Tesla. Advantage puts Tesla in a position to make progress towards Elon Musk's long-term goal, centered on autonomous self-driving, and while Tesla does sell cars with its branded full self-driving FSD capabilities, they're not fully autonomous. At this point of time, this means that right now a driver still must pay attention and be ready to intervene and take full control if necessary. And if full autonomy is achieved, Elon Musk believes could happen later this year. But even if it happens a few years from now, it could be a huge financial advantage for Tesla. That's because this software, coupled with Tesla's expanding manufacturing capabilities, could really turn the company into a provider of robotaxis, which could experience unprecedented demand from consumers and drive outsized revenue and earnings growth over time. And then the Tesla stock price will all make sense for everyone. And now this might be a too far-fetched goal for Tesla. If it achieves that, the amount of changes it could bring to this world, and also the revenue Tesla could be making, would be enormous, and the short-term vacancies in gross margin and profitability really are they pretty minor at this point relative to the long-term picture. And in the Q2 earnings call of this year, Elon Musk said that autonomy will make all of these numbers look pretty silly. He has been overly aggressive with his timing deadlines before, so who knows when and if it will happen, but when it does, but it's also pretty hard to bet against Elon Musk.
영상 내용에 도움이 되셨다면 구독과 좋아요 부탁드리겠습니다. 비트세븐이었습니다. 감사합니다.